Hey, it's Rob, the Ignorant Entrepreneur. What's in store for Mastercard this earnings season? Mastercard, with the ticker MA, is set to release fourth quarter 2020 and full year earnings on January 28th before market open. In the last reported quarter, earnings of $1.60 per share missed the Zacks consensus estimate by 3.03% and also declined 25% year over year. The bottom line suffered from lower switch transactions and weak cross-border business. Now, factors impacting Q4 results. Mastercard's earnings in the to-be-reported quarter are likely to have gained from steady levels of spending as most of the markets that the company operates in are gradually recovering. The company is likely to report an increase in switch volume, which measures the number of times the company's products were used to facilitate transactions. The metric has continued to show an improving trend since the beginning of May, partly owing to the relaxation of social distancing measures in several markets and the impact of stimulus on the U.S. economy. This trend is likely to have continued in the fourth quarter as well. Management announced that the overall growth in switch volume rose 3% in the week ended November 21st, primarily driven by higher contribution from the United States, up 6% than the rest of the world, which was up merely 1%. Business growth in the United States was attributable to the recent strength in the holiday retail spend, notably in electronics. These upsides are likely to have continued in the December quarter too. In Europe, more stringent social distancing norms are likely to have caused a decline in restaurant, lodging, and retail spending, a trend that most likely continued in the to-be-reported period. Card-not-present transaction volume is likely to have expanded against the slight reduction in card-present volume in the final quarter of 2020, as people now prefer more contactless modes of payment to avoid any physical contact. Switch transactions, defined as the number of transactions initiated and switched through the company's network during the period, might have slowed down during the quarter under review, attributable to the decrease in card-present activity, partially offset by faster growth in larger ticket card-not-present transactions. Mastercard's cross-border volumes are likely to have remained sluggish, as lower-yielding intra-Europe volume is expected to have increased in card-not-present volume, offset by a modest drop in card-present volume. In the to-be-reported quarter, expenses are expected to have declined owing to reduced spending on advertising and marketing, travel and professional fees, partially offset by higher personnel costs to support continued investments in the company's strategic initiatives. Also in the quarter to be reported, the company closed its buyout of Finicity for $825 million, a leading North American provider of real-time access to financial data and insights. The deal will likely expand the company's reach in open banking, an area in which it has been too keen to grow for a while now. Now, for Q4 earnings and revenue expectations, the Zacks consensus estimate for Mastercard's fourth quarter earnings of $1.52 per share indicates a 22.46% decline from the prior year's period reported number. Likewise, the consensus estimate for sales of $4.02 billion suggests a 9% decrease from the year ago's quarter's reported figure. Moving on to earnings surprise history. The company boasts an attractive earnings surprise track. Its bottom line beats estimates in 3 of the last 4 quarters, missed in 1, the average surprise being 6.61%. This is depicted in the chart shown. What do you guys think? This is definitely a stock I'm going to be having my eye on. You have less than 24 hours. Like always, let me know what you think in the comment section below. Like, comment, subscribe. This has been the Ignorant Entrepreneur. I'm out.